Welcome back to FT Markets. It's been a year of a strong dollar and some very weak currencies in emerging markets. But does that balance tell the whole picture? Michael Power is Chief Strategist and big thinker at Investec Asset Management. He has some ideas about this. Michael, what is the difference between the dollar and other currencies telling us this year? And before you answer, let me bring up a first chart based on some numbers that you pointed out to us earlier on. Talk us through it.
What I think is happening is that the numbers that we are being given by the likes of the IMF and the World Bank and often some of the investment banks are flattering to deceive in terms of what's happening in world growth. They're telling us that we're getting 2-3% world growth this year, but I'm not sure it's nearly as good as that when measured in dollars.
Right, and let's see what that measurement does to us. We can see the brownish reddish blocks are GDP growth measured in purchasing power parity terms, and the blue ones are market rates. And we see in PPP terms, world growth is up. US, because it's the dollar, is the same in both terms. China is up but much more in market rates. And we see that the EU, surprisingly, which is growing in most people's estimation this year, by your measure, is a massive net detractor from global growth this year, and Brazil, almost off the scale for other countries, really pulling people down because of its depreciating currency, though. How does your model fit with that?
Well, what we have is two languages being spoken in our world. We have the language of economists, which is frequently purchasing power parity, and the language of people in finance, which is usually rooted in the dollar, especially if you're in the corporate sector. So you're selling into a world of dollar demand, not PPP demand. So what you want to know is how much the world is growing as a corporate executive. And that's better to stay speaking dollar, not PPP.
Right, and by your measure, the world is not growing. In many people's minds, it is growing about 3% and a bit this year. By your measure, it's contracting by almost 5%. Is that how you see global growth?
That's how I see it. And I think that it was interesting last week where the chief executive of Maersk said something similar. He said, look, the world that I see is a very different world from the one that the IMF and the World Bank are telling me is out there. The world that I see is actually contracting.
Right, let's have a look at another way of looking at it in our second chart, where we have, against the dollar, three big currencies, the renminbi, sterling and the euro. Everybody was massively impressed by the fall in the renminbi in August, but we can see from this chart, when you look at it against the dollar, it's not been particularly spectacular when you compare that with sterling's fall, and much less so with the euro's fall. I would say, as many would say, that the renminbi fall is spectacular because it's a managed currency which has fallen a bit, so that's actually a lot. But I suspect you're going to say that's not the point.
Well, it isn't the point. Yes, it is spectacular because it's moved. And this is the point that I think that people have somewhat missed in terms of what happened in August. They said it was a devaluation. For me, it was much more structural than that. The fact is that for the first time ever, we're now beginning to see the renminbi move of its own accord. It's still not moving as freely perhaps as the euro or sterling is moving, but nevertheless, it's starting to float.
Right, but we measure that obviously against the dollar. We're wrong to be doing that. What is actually happening to the renminbi if not moving against the dollar?
The way I put it, and I'm going back to almost a Galileo story here, is that for a long time we've assumed that the renminbi is a sort of moon circling around dollar Earth, and that it's in the dollar's orbit. What I feel that we've realized now is that it's not a moon circling around dollar Earth, but it's a planet in its own right. And we're going to have to adjust the way that we think about currencies to the fact that the renminbi moves in its own orbit and is not just trapped in Earth's orbit.
And what does that, bringing these two things together that we've been talking about, what does that tell us about the forces that are worrying so many people at the moment about deflation coming out of Asia into the developed world, about manufacturing being in recession? How does your view on those interplays affect what people should be thinking about that?
Well, I think that it probably means that we don't need to be worrying about China as much as we have been, but we may need to be worrying about what's happening in the West more than we have been in the process. You mentioned Europe. I think Europe has actually been a big drag on the global economy this year, but that has not been the narrative that we've heard from most market commentators.
What we hear all the time is that emerging markets have been a big drag on global growth, but you're saying that look at it in the terms that multinationals think of. And the problem for them is much closer to home.
Yes, although I have to say that most emerging markets have indeed been a drag on global growth this year, and Brazil is the obvious example of that instance. When you actually look at what's happening in the world in terms of dollar growth this year, China will still contribute more dollar growth to the world this year than even the United States. The euro will detract most, and behind the euro comes Brazil. Most of the emerging markets are on the side of detracting, unless they're to be found in East Asia, where most of them are adding a small amount, because they're to some extent shadowing the RMB in terms of their currency. But in aggregate, what we're seeing is a destruction of dollar growth this year, not an addition to it.
So, and just quickly, your view then on what we should expect in the next couple of years, is that a situation that's going to persist?
I don't think the dollar can get that much stronger from here, and to some extent the dollar is a moving target. It's, when we measure things, we usually assume that 12 inches will always remain 12 inches. Because it's the metric we're measuring global economic performance by, we can't assume that the dollar is always going to be 12 inches. It is going to change its size over time, and as a result there will be consequences for everyone else. I don't think the dollar is going to get that much stronger looking ahead, so that's not going to be a factor too much in the equation. I think we can get some growth from here on. But I just wanted to make the point that 2015 is not nearly as good as many people are making it out to be. In fact, it's probably, if you look back, in terms of dollars, the same level of dollar growth destruction as happened in 2008.
Michael, thank you very much indeed. So plenty of moving parts there, lots to think about, especially as we come into the potential change in monetary policy in the US next month.